Okay, I'm going to go ahead and get started. Good evening, everyone. Welcome to this evening's webinar on access to capital. My name is Giovanna Bracchi, and I am the director here at La Fuerza CDC, La Fuerza Community Development Corporation. We are a 501c3 nonprofit certified by the Treasury as a community development financial institution. Our mission is really to promote economic growth on Long Island by providing minority and women-owned businesses, small businesses, access to capital, business development services, and resources to really help you get established and grow. La Fuerza has two basic programs. Um, like I mentioned before, one is the access to capital. The other one is the business development, which we either do in private counseling or in group sessions. Our mission is really around financial information and making sure that small business owners can qualify for capital, that they're prepared and have the information to qualify for capital. Um, and the access to capital, which is in the form of microloans to small businesses. Those are our two programs. The way I like to do my access to capital program is to show you our product and go through our process of application and underwriting, because as a CDFI, it is pretty basic, and any other lender's, application and underwriting will be similar. Maybe a little bit more complex for larger banks and larger CDFIs, but you will be able to. Oh, did someone have their hand raised? Can everyone
Sorry,
hear
that's
me?
me. Sorry about that.
Oh, okay. I just wanted to make sure you could hear me. So the way I like to do the webinar is by showing you our product, financial product, and the application process. What do we look for? And have you go through the process. And then at the end, we could do a Q&A with specific questions on your needs and your business. So let's get started. So the first thing that we want you to think about when thinking about capital for your business is that there are many different products. There are many different lenders, and there are many different products for different needs. There are business owners that are looking to purchase a business. There are business owners that would like to purchase real estate, and there are business owners that are looking for equipment or cash flow management. So there are many different lenders and different products, many different loans. There are lines of credits, and then there are term loans. La Fuerza's loan product is a microloan, which means we go up to $50,000. There are other loans that are small business loans that could go up to $5 million. So there are different tiers, and like I said, different products. So get to know the lender, get to know the product, get to know the terms would be next. So, depending on what your need is, right? Get clear about what it is that you need. Look for a lender that has that product, and then get to know that product, get to know the terms of that loan. What is the interest? What are the requirements? What are the fees? What are the pre-qualifications? So our interest rates are fixed interest rates, not variable. They don't change according to prime. So they go between 4 and 10%. That interest rate, it's decided by a loan committee and it is a fixed rate. So if they decide your loan is $40,000 at 7%, it will be 7% for the life of the loan. If your loan is for 5 years, $40,000 at 7% for 5 years. We will give you an amortization schedule with every payment for every month, where it breaks out the principal and the interest, and the 7% will be an interest rate that is fixed. It doesn't change based on prime. The terms are, as I mentioned, 5 years. Some loans are 3 years. Some lenders will go, 6 years. Lines of credit are usually yearly. Then there are closing fees. We have a 1% closing fee. So the most we would charge is $500 at the time of closing. We don't like to roll the closing fee into the loan. Some lenders do that. The reason why we don't want to do that is because you are going to pay interest on that closing fee for the life of the loan. And we see a 1% closing fee of $500 to be affordable enough for the client to pay it up front. Some interest rates could be 15%. So, to pay interest on a closing fee, for us, we just don't recommend it for our loan product. Some closing fees, of course, if they're 1%, or sometimes they call them points, especially on the mortgage side, even if it's 1% on a, $500,000 loan or an $800,000 loan, now we're talking about a larger amount. So that's why you can't roll it into the loan, and have that as an option. Qualifications for us, you need to be a small business on Long Island. You could be minority owned, disability, women, veteran, wonderful. That's really our target market. But we, in general, help all small businesses on Long Island. We do have a requirement to attend at least one free credit counseling. Most of the clients that are coming to us as a smaller CDFI are clients, or I should say business owners that don't yet qualify for traditional lending. So you may bank at Bank of America, Chase, whatever it is. You're a business client, so you have your business checking account, but you may not qualify for a business loan at that particular bank yet because they require history. So you need to be open for 2 to 3 years. You need to show cash flow. You need to have collateral and assets. So you may not qualify for some of their requirements, where a CDFI will look at the business as a whole and not just your credit score, not just your collateral. So this is a place where a lot of these business owners can come and still access that needed capital for their business at that starting stage of the first 3 years that you're in business. We also have a New York State revolving loan program, with Empire State. That goes up to $25,000. So if you are looking for capital for simple things like machinery, equipment, maybe it's $10,000. We get a lot of small businesses that even in that first year, they need that little bit of 10,000 or 15,000 for equipment that will really make an impact in their business. This is a great program because the interest rate is between 3 and 8%. So even if you're 3 months in business and you're considered a little bit of high risk because you just opened, the most we can charge is 8%. We can also stretch it to 7 years, which means your monthly payment will be lower. We have no prepayment penalties. So if you borrow a loan and start it today, and 6 months from now, your business is booming and doing wonderful because of the capital injection, you can pay it down in 6 months. You can pay it down in 2 years without any penalties. For qualifications for that New York State loan fund, you have to be a minority women or women business owner with less than 20 employees, and the business must be open in Long Island. So it's 51% minority owned. We also work with other lenders, especially on the SBA products, which are larger, and I will go over them at the end. These are larger loans that can go up to $5 million. So we assist you in qualifying for them, meaning we help you prepare for those type of loans. So in this first slide, these are our products. So I just want you to get to know the lender. We are a CDFI. There are CDFIs, there are credit unions, there are traditional lenders. I'll use that word a lot. That just means regular banks. Then get to know their products, then get to know the terms. Look for qualifications, requirements, look for fees, read the fine line even when you get to the closing. You don't want any surprises. So again, get clear on what you need and what you need it for. Find a lender, find the product, or you can reverse that. You can find a product and then go to that lender and get to know the lender. So once you get to that point, all lenders will give you an application for a loan package. The application is going to be really two parts. Number one, the actual application, which is a list of questions. These are financial questions and information about the owner and the business. The second part is the loan package, a list of these required documents that the lender will look at. This is our list as a CDFI, and I'm going to go through each one of these. A business plan, we require that. Some lenders do, some lenders don't. It doesn't need to be, a very long, extended business plan, but it really needs to speak about your business, your product, your service, your market, and your finances, right? The history, who's doing operations, who's running the front of the house and the back of the house, more or less. 3 years of tax returns. So we require 3 years of personal tax returns for the owners and 3 years of business tax returns max. But if you just opened, you're on your first year, we're going to rely on your profit and loss for that current year and your projections for the next 3 years. If you're open 1 year or 2 years, we will take those tax returns. So we'll take whatever you have for the business, and then we will take 3 years of personal for the owners. Everybody's different. Everybody asks for both business and personal. Projections and profit and loss, like I said, at the beginning of the year, it's pretty easy. When it comes to profit and loss, you're not giving me much, for this year, but if it's prior to tax season, you're going to give me a profit and loss for last year because your taxes were not done yet. If it's after tax season, we want a tax return. All businesses and owners must file tax returns. A lot of our programs are government programs, so we need to ensure that tax returns are being done. Projections, we require a 3-year projection. We want to see what your business will look like financially for the next 3 years. And it's a very simple, we'll give you a sample that you can use and just fill in your information. We can work with you on filling that out if you struggle with it. But we do require 3 years projections. Then 3 months bank statement, business and personal. 3 months, pretty simple. 2 forms of ID, once we get through the financial information, now it's just basic proof of ID, proof of ownership, right? We want to make sure that you are the owner. um, and that your business is registered. So either certificate of incorporation from New York State, articles of incorporation, your EIN letter from the IRS, which has your tax ID number for the company. If you rent commercial space, we would like a copy of the lease and a copy of your liability insurance. We want to make sure that your business is secured. Proof of address for the owner and the business. This is a simple utility bill. And then any licenses that are required in your industries of or permits for commercial spaces, your CO. This is very important, especially for the food industry and the early childhood industry, like daycares, home-based daycares, or daycare centers. It's really important. And then just a simple use of funds list. How are you using the funds? Right? Is it for machinery, equipment? Um, it could also be to refinance existing high interest debt that the business may have. So this is our loan package. We suggest that you have these documents ready because you never know when that opportunity may come and you have to borrow capital because you don't have it all. Um, So like I said, there's two parts. There's the actual application, and then there are the list of required documents. All lenders are different. This is ours. Our application is also a portal where you log in, you save your password, you can go in and out of the portal as many times as you want. Some lenders might still do it the old-fashioned way where it's an actual paper application that you may grab at one of the branches, but a lot of them do it online nowadays after the pandemic. A lot of people, I would say a lot of lenders invested in technology so that they can have the capacity to do this online. And it's very convenient for clients, but speak to a loan officer at whatever lending institution you go to so that they can guide you through the process. Okay, so what do we look for, right? How do you prepare for a loan and also think about like what do we look for? The reason why we ask so many questions during an application and the reason why we ask for that loan package, it's because we want to look at the financial health of the business. We want to know the risk of lending to your business. So we look at a lot of financial informations. The way you can prepare is by asking yourself some of these questions is how much do I need? How much capital do you need? So you need to get clear and always remember that this is debt. This is a loan that has interest and a 1% closing fee. This is not a grant. This is not, like just startup capital that you might be getting from an investor or a family member. This is a loan. So get clear about what it is that you need it for, but have a reasonable projection, a reasonable understanding of how much you need and what it's for. And also, when do you need it? Remember to ask yourself that because, like I mentioned before, you never know when you can have the opportunity to grow. So be prepared for capital. Be prepared to go through this application process because no matter where you go, you have to go through the application process. The lender must do their due diligence and underwriting. Um, they may be slightly different from lender to lender, but it's still an application, a loan process. Where is your business locating and how long have you been in business? That could matter. There are some smaller CDFIs like us that just focus on an area. And then there are some lenders that are nationwide. Do you have cash flow? Okay. There are simple exercises that we can work with you as well to figure out your cash flow. But you should know if your business is breaking even, especially at the beginning stages, those first 3 years, you want to know when your business will break even and when it will be profitable. When will you start making a profit? So you want to make sure that you're aware of that because the lender will be looking for that. Do you have employees? Um, do you have collateral? Like I mentioned before, some of the larger lenders, like banks, look for collateral. They want to know what the business assets are and if you have collateral. Do you have any other debt? Now, there's nothing wrong with using debt to grow your business, but we want to make sure that it's balanced and we want to make sure that um, you're disclosing it because it will come out. And if you don't disclose it, then it's a red flag that you were hiding debt. Um, and we want to make sure that you're managing debt. So again, when we're looking at debt, it's not that it's a negative, it's just that we want to make sure that it's balanced. And how is your credit score? For small business owners, especially at the beginning stages, going for a business loan, almost all lenders will look at your credit score, the credit score of the owner. So I would say when you start to plan, when you're preparing yourself, work on your credit score. It's simple. I think most bank apps now give you your credit score. If not, you can order it online, but you should know what your credit score is and you should work on it. I know it seems like sometimes that credit score is really hard to understand the number and how they come to that number, but really just remember two things: pay your bills on time and don't have too much debt. You want to keep it below 80%. Okay. Okay, so some more tips on getting ready and planning ahead. Make sure that you have an accountant. Sometimes accountants could be a great asset for the business because they'll give you guidance on what to do. Make sure that you file your taxes. If you're not doing your taxes, I don't think any lender will lend. Um, have your documents online. Keep them in a safe place. Make sure that it's secure. Work on your business plan when you do have time so that you don't have to rush and do it when you're getting ready to borrow. I know that the Entrepreneurial Center works with you to do a business plan. So that's great because then you have guidance. Work on your projections and your profit and loss. We can help you with that as well. And then, like I mentioned before, what do you need the loan for? Because there are different products, because it is debt. So you want to make sure that you know how much you need to borrow and what it's for. Work on your projections, clearly show the benefit of this capital injection in your projections. Are you able to repay the loan? So when you're working on your projections, you have to add your debt payments. We want to make sure that your business is able to carry the loan on a monthly basis. Okay. Plan ahead for a crisis. Sometimes, you can put that into your business plan. But we always like to mention that. And then what to expect. So what are the stages after you submit a loan package? So for us, it's pretty simple. We have a team. We have a loan officer that works with you through the application process. It could be on your projections or your balance sheet. If you have questions on the documents, you're not sure. Once you hit submit, for us, it goes to the underwriter. The underwriter pulls that package, goes through the documents quickly just to make sure that everything is there. She sends you an email saying, we received your application and it's now moved to underwriting. If there's anything missing or if there's anything wrong, sometimes people just take a picture of the front of their tax returns and they don't submit the entire file, which she needs to look at several pages in there. So she will basically email you back to say, we received your application. please submit the following documents that are still missing. And then she'll send you the link to go back in and upload what you're missing. After it goes to the underwriter, I would say it stays there for a week to 2 weeks. She does her report and due diligence, and it goes to loan committee. Our CDFI, our loans are decided by a loan committee. Our loan committee is made up of bankers, CPAs, and business owners. They look at the loan package and they decide XYZ business is being approved at the requested amount of $40,000. The interest rate is 7% for 5 years. After they have that meeting, the next morning, our portfolio manager takes over. They email you the letter that you were approved for $40,000, and she gives you all of the terms. Okay. She sends you that letter with all of the terms clearly explained. She will email you the closing documents for you to sign and get notarized, along with an ACH form because we fund the loan electronically and we collect the payments electronically, which a lot of lenders do nowadays. And then she will also send you an amortization schedule, which shows you all the payments for the life of the loan. She also introduces you to the portfolio portal where you can track your loan and look at the history at any time. So that entire process, I would say, takes, we like to say between 4 to 6 weeks. Okay. There are lenders that are very different. Some of the banks, I'm sure, can go faster because it is not a manual underwriting like ours, where a loan committee looks at everything and decides. Theirs is based on credit, collateral, or cash flow. So if your numbers are, you know, equal to what they're looking for, you get approved. If they're not, you're not approved. So, it's a pretty automated system. There are some lenders, and I'll explain that when I get to the SBA loan, where, within 3 days you'll get approved, a pre-approval, and then you'll go through the rest of the loan package, submitting the rest of the loan package. So you'll get a pre-approval based on your credit, and your returns. But then, you have to submit the rest of the documents. So at least within 3 days whether you're approved or not. For us, it takes 4 to 6 weeks, but honestly, the loan officer will work with you until we feel you are pretty good to get approved. There are some instances where businesses come to us and they are registered, but they're not really opened. We don't lend at that stage. So when I say startup stage, I don't mean that you registered your business, but you really haven't done anything. It needs to be a business that is functioning, that it's producing. Yeah, so everybody's different. There are some credit unions that have great lines of credits. Some have, business credit cards. I'm sure that you can look into business credit cards, but remember that credit cards have higher interest rates. So that's a different type of lending. Okay, so here is the SBA loans. So like I said before, La Fuerza's loan is a microloan that goes up to $50,000. We do have clients that come to us that are requesting maybe $200,000, and we've had a lot of them at between the 150 and the 300 range. So we would work with them to qualify for an SBA 7A small loan program. This is the one that, you get the pre-approval in 3 days, and then it takes around 4 weeks for them to turn around the rest of the loan package. So this is really based on credit. So we want to make sure that the SBA is scoring it. That's a great word to use. So when they score you, it's all automated. So it's yes or no. So it's based on your combined credit score. But so if you worked on your personal credit score and you have good credit score and your business is at the stage where it's profitable and you have been um, operating for a couple of years, then you should definitely be able to apply and qualify for this loan. Now, these are larger amounts, so we don't definitely do not recommend this at the very startup stage. The SBA also has the 7A larger financing, which goes up to $5 million. I mean, the use of this loan could be like it mentions here. You can buy a business, including a franchise, leasehold improvements, renovations, property expansion, inventory. So these are for like small businesses that are pretty well established as far as being profitable. Okay. Um, Again, they look at financials. Down here it says borrow must show a 10% capital injection. Lenders do want to make sure that you are invested in this capital, in this business. Sometimes we get business owners that come to us at the very beginning and want to borrow so that they can finance the entire thing. And we want to make sure that you're invested in the business and that there is a capital injection from the owner. Um, that is the end of my presentation. This is who we are. Again, if you would like to follow us, I'm going to stop sharing because I'm going to open it up now for questions. Um, but I do want to mention, especially in this last slide, showing you these larger loans that, again, get clear on what it is that you need because there are different funding options, right? There's funding options at the very startup stage, which means like those first 3 years. Um, Midway, like when you're a growing business, it could still be like year two, but you have shown a profit and now you're growing. Maybe you want to get certified and start bidding for contracts. So you'll need capital to mobilize and grow. Maybe you have an opportunity to expand your space and get a larger space. Maybe you have an opportunity to get an additional vehicle or additional equipment that will allow you to produce more. So at that mid stage, there is financing there. And then for those stable businesses with solid financial performance, um, which is shown in your tax returns, that's how we can establish that. It maybe have like a large customer base and you're showing a lot of cash flow, the banks will be your best bet. But, there are large CDFIs that may have better rates. So again, get clear on what it is that you need it for because there are different products and different lenders. So even though you may qualify for a bank, a lot of customers, a lot of small business owners choose to go to a CDFI because we have the better rate. The rates are prime, not for most CDFIs, but for the traditional lenders like banks, it's usually prime plus, right? The plus is based on your financial stability, your financial performance. So it's just like when you are leasing a car where, if you have great credit, then the interest rate is at 2%. It's the same thing for that plus. So prime could be at 6.75, it could be 7.5. So it would be that plus whatever the lender is telling you. So if it's plus 2%, it would be 7.5 plus another 2%. So it would be 9.5%. Some lenders have specific loan products that make it a little easier for you to qualify, but the interest rate is 14%. We have a great line of credit that you can draw down, but the interest rate is 14%. So if you have a line of credit of 100,000, The great thing about lines of credit is that they only charge you for whatever you take out. They charge you interest rate for what you need at the time. So if I'm a small business owner and I have a contract, I'm a commercial cleaner, and I have a contract where I get paid on a 60-day basis, but I pay my staff, pay my crew on a weekly basis or even a bi-weekly basis, you're going to need that cash to pay your staff. So lines of credit are a good way to manage that cash flow, or if you're a seasonal business, that's a great way to manage that cash flow when business is down. Um, so you can use it. So if you have a line of credit for 100,000, but you only take out 10,000 because that's what you need this month, you're only going to get charged for that $10,000 that you took out. But you have to look at the interest rate because I've seen some line of credits that are at 14%. Okay. So again, be very clear about what it is that you need and what you need it for. Look for the product, look for the lender, look for the terms, look for the fees. Get educated on all that. Okay, now I'm really going to stop and go over the questions. Are there any questions? Or you can just open up your mic. I think everyone has the ability to do that.
Yes, they have the ability to
Yep.
open their mic, use the chat, or use the Q&A.
Okay. No questions? Well,
Hello.
hi.
Hi. My name is Maria. I'm in business right now.
Mhm.
So I'm not planning on doing anything right this moment, but the free consultation, would I still be able to maybe set up a meeting just to like talk to somebody face to face to like, I mean, obviously I heard everything that you said, um, and saw all the screenshots, but like if you do a consultation, do you have to wait till you're ready or can you do it earlier?
You could do it earlier and we can send you all of the information so that whenever you're ready, you can, start the process. And then during the consultation, if there's any concerns, we can look about your current financial status. We can look at it and see if there's any, things that you should be working on. And then we can also give you the information for whenever you're ready.
Yeah, like that's my concern. This is my first like actual
Yeah.
business, and I actually took the entrepreneur class, so I
Uh-huh.
definitely
Yeah,
learned a
that's
lot.
great.
Yeah, Santos was awesome. Everybody was so great. And you know, I kind of just went into it and not knowing much, so I learned so much, and learning so much actually like
Yeah.
not that it backfired, but like obviously I want to do everything right and I want to learn more. You know what I mean? Like,
Of course, yeah. And it's overwhelming
great.
when you're
Yeah.
getting all of the information too, but you did a great thing by signing up and really, getting all the information.
Yeah, it was great. So, yeah, okay, so good. So
So
then I'll keep it.
absolutely, yeah. We do all of our consultations over Zoom, so you can just go to our website and sign up for a Zoom consultation, a one-on-one.
Oh, good. Okay, thank you so much.
Yeah, you're welcome.
If any questions do come up later, you guys can always reach out to myself, or I
Yeah,
know Giovanna put her contact information up. So if you don't have
yeah,
any questions tonight, but they do arise at a later date, you can definitely reach out to us, and you can also go back to this recording on our YouTube page.
absolutely. And again, there are benefits to capital, so it's always great to prepare and be prepared because I'm telling you, we have a lot of clients that come to us last minute when they have that growth opportunity, or it could be for expansion. So if you're planning and your 3-year goal is to really open up a second location, or like I said, a second vehicle, um, you want to prepare for that.
Are there limits to what they could use the loan funds for? Like, for example, could they use it for if they wanted to hire an employee just so that they can start expanding their business? They
Yeah.
use it towards payroll?
Yeah. So I'll tell you what we look for. So we never say that you want to use it to hire an employee unless you have solid projections that by hiring that employee, right? Because it would be um it's a capacity move, right? You're building capacity, you're building the capacity of the business, which is great, right? You're on a growth trajectory, but your projections need to be solid and they need to show that by hiring that employee, your revenue will grow by a certain amount and you'll be able to carry the loan and cover the employee's expense. Or I should say the expense of having that additional employee.
Thank you. Thank you.
Mhm. Yeah, you always want to show so tell the story of the numbers, right? We always say the projections. Tell us what it is. It's, yes, I want to take out a $20,000 loan. I'm going to hire someone to grow my capacity. By hiring that additional employee, my business will increase by, a certain percentage because I will now be able to cover, right, additional clients or whatever it is that your business does. So you will very rarely see that on uses of funds because usually we say working capital, it falls under working capital, but usually we see equipment, machinery, real estate, inventory, even marketing.
So I did add the center's contact information into the chat. Does anybody else have any other questions? Like, feel free to unmute and ask all of your questions.
When you're shopping around, you can also, and I do say shopping around because I do want you to look at many products. If you're in that startup stage and you only need $10,000, we really are your best choice. But as you grow, or if you need a larger amount, do shop it around. And there are loan products that are based on credit. Like I said, they're based on accounts receivable or your collateral. Um, at some point, we don't want you to take personal loans. They might have a higher interest rate, but you want to obviously, look at that. All business loans are guaranteed by the owners, so you will have to give a personal guarantee, and that's very important because all lenders require that. So this is a business loan that is guaranteed by the owner.
When there are loans specifically for MWBEs, do they need government certification or do they just need to self-declare, self-identify?
Right. So for us, you could self-declare because our funding does not require you to have a certification. But there are some programs that you must have a certification. So you just want to make sure that you ask.
Thank
For
you.
us, it's not.
Thank you for that.
Welcome.
It seems like there's no other questions, so I will give everybody the rest of their night. But like I said, our contact information is in the chat. Giovanna put up her contact information. So if there are any follow-up questions, even if you review the recording on YouTube and then you have questions that you may not have tonight, please feel free to reach out to us.
Thanks, everyone.
Thank you. Have a great night, everybody.
You too.
Bye-bye.
Have a good night, everybody.
Good night.
Good night,
Good
everyone.
night. Good night.
Mm-hmm.